All right, welcome everyone. See a couple people were already dropping some comments in there before we went live. If you're tuning in, feel free to drop a comment there. And we're going to wait just a few minutes. We got to wait to go live on all the different platforms and give everybody a chance to tune in here. So hang tight. We'll get started here shortly. Good morning. Good morning. Very interested to see what the rates look like today. I really like checking them out. When and when news comes out on a daily basis, the rates change. So it's very interesting to see how different events out there affect what the rates are. Good morning from Michigan. All right. Good morning. Good morning. Those of you just tuning in, we're just waiting a couple minutes to go live everywhere. So hang tight with us. Make sure we go live on all the different platforms. This is streaming on YouTube, Facebook, Instagram, LinkedIn. Is that it, Nick? Yeah, I think that's it. We're streaming everywhere, so we just got to wait for a second here for all the different platforms to go live, and then we will get into it. All right, good morning to everybody tuning in the chat there. Let's see here. All right, let's go ahead and get started then. So we'll take off the chat for now. So, welcome everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non QM loans. And what we do every morning is go through the different rates of all the different programs out there, including conventional and FHA, things like that. But we also do some pricing on our non QM loans, and today we're going to do a deep dive into some of those non QM programs like we do every day. And today we're going to talk about self-employed borrowers and those type of loans that we can do for our self-employed borrowers. So what we'll do, Jose will go into a deep dive on that topic, pull up a couple actual quotes so we can go through it. But before we do that, like we do every morning, let's have Nick go ahead and pull up our pricing tool and let's check out what the rates are today. So go ahead there, Nick.
All right, thank you, sir. Let me pull up my screen real quick and we'll get into it. So, this is our pricing tool. This is only for our mortgage professionals. So, if you'd like a full loan estimate, please get with our team. We have over 350 loan officers licensed in 22 states, and we can do our business purpose loans, our DSCR loans, in pretty much every state. So, if you need a full loan estimate, please get with us. We'd be happy to do that. But what we do every morning is use our pricing tool to check the general indication of the markets. A lot of news has been happening with the Fed, a lot of volatility in the markets. So this is a great time for the show. So it is March 8th, just after 11 a.m. Eastern. So all of our standard programs have our live rates pushed. So we're going to check out some general information with a general scenario. So first, let's set up our scenario today. We're going to keep our loan amount 400,000, nice easy loan amount. For all of our scenarios, we'll do an 80% loan to value, so 20% down payment for all these examples. For our price, we're going to look for 99. That means one discount point. Most of our customers are asking to buy down the rate a little bit because the rates are higher than they're liking, most people, right? So we'll look for the best rate combo at one discount point in cost. And we're going to go through a few examples as we do every morning. We're going to do our conforming, which is our conventional programs. Then we're typically going to go to FHA as the next option. And then we're going to go into our non-QM, which is under expanded guidelines. So at the Mortgage Calculator, we have over 4,500 loan programs under expanded guidelines. So a ton of different options. And we're going to go through a couple there. And then obviously Jose's going to include some of those in his deep dive here in a minute. Now, we will not do VA live. We do those on a couple shows. But only our veterans qualify for VA. If you do qualify, we appreciate your service and would be happy to quote that for you. But since not everybody qualifies, we don't do that every day. And same with USDA, the property must be in a rural area that's USDA eligible. If you happen to be shopping in a USDA area, please get with us. We'd be happy to quote it. But since not everybody is, we don't do that every show. So let's start with our conventional rates. We're going to do a purchase. We're going to do a fixed 30-year. It's typical standard loan. We're going to do primary occupancy for our first set of examples. We're going to do single family, 1 unit, keep it nice and easy. Florida, Miami-Dade, that's where our office is based. And for all of our examples, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40 here. So let's check out our rates this morning. So pretty much the same as yesterday, maybe a little bit up after we had some chatter from the Fed, right, on in the news there. So I believe yesterday was 6.875 for 1 discount point. Looks like today the best combo the computer's finding is a 6.99 rate for 1 discount point in cost for our conventional loan programs. So those are great. We love to watch these fluctuate. Remember, these do fluctuate with the market. As you can, as Kyle mentioned earlier, whenever the news comes out, especially news from the Fed, we do see some action there. So that's why we do the show every morning. Now, if a customer does not qualify for conventional, which is typically our first option, we'll typically pull up the same scenario and go with an FHA option is usually also something we like to provide our borrowers. FHA offers us a little bit of expanded room on our DTI limits and expanded credit requirements as well. So FHA has a little bit more relaxed guidelines typically. So that's typically the second choice here. We'll keep everything else the same as our scenario before. And let's compare our FHA rates. I remember there was some announcements just this last month that the FHA mortgage insurance is changing. So we do see some great options for FHA. Before FHA was typically a little more expensive. It looks like at the end of the day, apples to apples, we're going to compare the APR. And this option up here, our 6.25 rate for 0.875 in discount points cost, even with mortgage insurance, with FHA mortgage insurance, it has an APR of 6.848. So a little bit lower than we just saw on the conventional. So FHA, we're loving that right now. If you'd like an FHA quote, please get with us. Definitely comparable, and actually today, especially, even a little cheaper than conventional, which is pretty rare. So we do appreciate those changes. Remember, there is an annual mortgage insurance, which is paid monthly, and then there's the upfront mortgage insurance. They did change the annual, which does help us a lot. Now, let's go back to the pricer. If for some reason a customer doesn't qualify for either conventional or FHA, those are typically the end of our options at many other banks and lenders. But here at the Mortgage Calculator, we have over 4,500 other options under expanded guidelines, aka non-QM. That's what we're really passionate about, is providing alternative solutions, and these allow us to use alternative income documentation. So we'll keep everything else the same, but you'll see a new option pops up under non-QM for income verification. So we can go full doc, which is the same as FHA and conventional. That's typically 2 years tax returns. But we will typically use non-QM to use an alternative income format. So 1 year alt doc, 2 year alt doc, asset related. We've done a couple shows on that. If you want to check out those quotes, Jose does a deep dive on those. Business bank statements, very popular for people that own businesses. 12 and 24 months, most common. Investor DSCR, we'll do that in a minute. Those are our most common investment property programs. And for the show today, our most common non-QM request by far is for a bank statement loan. And that is going to be for our self-employed borrowers. Many times our self-employed borrowers, which again is going to be our topic here in a minute with Jose, have a hard time qualifying many times with 2 years of tax returns because of various write-offs and ways they do their taxes because they're a business owner. So we're able to use 12 months of bank statements for those borrowers instead of their 2 years of tax returns to determine a debt to income ratio based on their actual cash in the bank and their actual business cash position. So these are great options and typically allow us to qualify a borrower that could not otherwise qualify, or qualify a borrower for more, right? Maybe in this case, this customer could only qualify for $200,000 conventional, but they want a $400,000 loan amount for a larger home. That's when we would switch to bank statements, and typically we can qualify a borrower for more. So let's check out our bank statement options under non-QM under this same scenario. So we have a few options here, 7.25, 7.625, And way up from there, there's hundreds of options here that you guys can see under these alt doc. All these programs do vary in the qualifications and such. So some options as low as 7.25 for one discount point and up. Some of these may allow things like a credit event, such as a bankruptcy or a foreclosure, and other things, along with the ability to use the bank statement income. So a lot of great options here. Jose is going to go into a deep dive of which one of these to pick for an exact scenario because there's so many. And please get with our team so we can navigate through here and find which one fits your scenario best. So that's what we love about non-QM is we have a bunch of options. Obviously, the rates are a little bit higher than you saw for FHA and conventional. But again, this is for a borrower who would otherwise not qualify or would otherwise not qualify for the amount of loan that they're looking to get. So these are great options, especially for our self-employed. And Jose is going to go into all the other great options as well because, again, there's over 4,000 flavors of these programs. So before we pass it off to Jose, let's get into our final scenarios for investment properties. So every morning, we also want to check out our rates for investments. We love working with investors, whether they're first-time investors getting their first rental property, or we love to work with our investors that have hundreds of rental properties in their portfolio and do our amazing non-QM loans. But first, let's set up our scenario for an investment property. Same LTV, 80% loan to value, 20% down payment. We'll keep everything else the same, and we're going to compare our conventional investment property loans to expanded guidelines, aka non-QM investment property loans. Remember, FHA, VA, and USDA are not applicable for investment properties. So we'll choose conventional first, keep everything else the same as all our other scenarios, and we'll see what happens when we switch to investment. As I say every morning, the GSEs have added additional what I would call penalties, aka loan level price adjustments for investment properties. So although we see some great rates, unfortunately there are no combinations the computer was able to find for one discount point in cost. So you see here a 7.125 rate for 3.625 in discount points. So many times our investors are asking for other options, right? They don't mind having a higher rate typically if they can lower these discount points, these costs out of pocket. Investors love to have less points so they can use that money to typically buy other rental properties or invest in other rental properties. So there's some options here for probably a little bit lower. So you see if we go up to 7.49, 3 discount points in cost. But unfortunately, the computer just can't find anything lower. So although we have a bunch of options, we're restricted by we can't really go much higher in the rate because that's just the conforming limits there. That's where we love to present our non-QM options for our investors, which are pretty amazing. So if we pull this back up for our last scenario, do investment property, do expanded guidelines, aka non-QM, now we have a ton of options that will allow us to find some obviously higher rates with lower costs for our investors. So we'll keep everything else the same, but we have 2 special options that pop up under investment properties for non-QM. We have first our income verification. So our most popular program by far for an investment property is going to be our investor DSCR program. And that's because it actually doesn't require any income from our borrower, no employment income from our borrower. We're simply going to use the estimated rental income from the property we're purchasing in order to determine if that rental income can cover the expenses, right? The PITIA of the housing expense for that specific property. Typically, as long as the property cash flows, right, the gross rents will cover the expenses. Typically, that's a greater than 1 ratio, and that affords us a whole bunch of programs. We even have programs for under 1 ratio for properties that don't quite cash flow, down to 0.75, and even some down to no ratio. So there's a whole bunch of flavors of these programs. Please get with our team to find which one fits with you. And when we do these non-QM investment property programs, there's always typically a prepayment penalty. We can select 0 if you wish. If you don't want a prepayment penalty, that's no problem, but it does limit our loan programs and obviously cost more. Typically, we're always going to use a 3-year prepayment penalty. That's pretty standard for these programs, so we'll do that today. And if you're okay with holding a property for a long time, 5-year prepayment is a great option because it does obviously lower the cost for us. But let's select 3 years and check out our DSCR rates this morning. So looks like the rates have gone up a little bit, obviously, with the news, unfortunately, but that's why we do the show every day. We had some little bit lower options before. Right now, it looks like the best combo, 8.99 rate for 0.975 in discount point cost here. However, remember there are investors wanted to save money out of pocket, right? So instead of 3 points for conventional for a little bit lower rate, obviously, we have a higher rate here, but less discount points and no employment income needed, no employment verification needed, no income verification needed. We're simply going to use the rental income. So our investors that own multiple properties can do multiple purchases, multiple cash outs at the same time. So a lot of flexibility that we're afforded under the DSCR programs. And as you can see, there are dozens of these programs with different DSCR ratios that are allowed. For example, different prepayments that are applied for different combinations. So a lot of different variations of this program at different costs and DSCR rates. And that's because some of these may allow things like short-term rental income and things like that. So please get with our team. They can navigate which ones of these will fit best for your scenario. And Jose is going to go into a couple options here. I hope he has a DSCR option for us, but I'm sure he's going to have a whole bunch of non-QM stuff for our quick deep dive examples. So let me switch over and get that started. And then I'll pass it over to Jose to actually pull up the rates. All right. So thank you guys for watching the live rates here. Now we're going to go into our detailed segment here where Jose is going to pull up self-employed borrower loan options. Typically we do like one example, but I believe you have quite a few examples here for us, Jose. So self-employed borrower, pretty big bucket, but that's where non-QM really comes in handy because for self-employed borrowers, we have all kinds of different types of income verification we can use. And that's what Jose is going to explain. Instead of one example, he's going to use one scenario and have a ton of examples of different flavors of our non-QM program. So you ready there, Jose?
Yes, sir. Ready to rock.
All right. You want me to show your screen?
Yes, sir. Good morning, everybody. Thank you for joining the Mortgage Calculator for daily mortgage rates with the Mortgage Calculator. Jose Gonzalez, sales manager here, licensed as both MLO and realtor since September of 1995. So today we're taking an outside the box approach to going over quotes, right? As Nick said, this time we're taking a scenario which we encounter quite a bit here at the Mortgage Calculator. It is self-employed borrowers, right? So in this case here, we're taking one scenario, which is a $750,000 one unit purchase. Our borrower has excellent credit above 740. And again, this is self-employed borrowers. So again, we've determined already here, we've established the point that our borrower is self-employed. It's very important because that then allows us to offer a plethora of options for our borrower because we have a lot of solutions for self-employed borrowers, especially self-employed borrowers purchasing an investment property, which is what this is. So in our first scenario here, we're going with a conventional purchase, right? This is the best case scenario that I found for a conventional purchase with the lowest cost option at 8.375% and the lowest rate option at 7.375, which is just a tad. I believe that's 2.5 points on that one right there.
So is this an investment property then?
Yes, sir. These are all going to be investment property purchases, 80% loan to value. So 7.375 is the lowest rate option available that we can offer and still be in compliance on our loan, and 8.375 is the lowest cost option, highest rate. So keep in mind again, this is full doc, conventional, Fannie, Freddie, which would require the borrower to close in a personal name. They can move it into an LLC after the closing as long as they are 100% owner of the LLC, and they get pre-authorized by their loan servicer to do that change because that's a very important point to consider, that they cannot close in an LLC. Some people need to close in an LLC for a lot of reasons that are very valid. So keep this in mind, that if you don't need to close in an LLC and you're full doc and you get your automated underwriting approval, then this is the one for you. Again, obviously, this is also keeping within conforming loan limits, which we're doing here in this example. So our next option is a portfolio loan option. And I'm not talking about portfolio loan like blanket loan. This is essentially a loan not sold into the secondary market. The investor that we sell this loan to keeps this loan. So this loan tends to have less loan level price adjustments than most of the agency loans will have. However, it is a little bit higher. Let's look at the pricing a minute when we compare here. 8.25 was costing 22.50, and over here 8.25 is costing 52.50. So obviously it is a little bit more expensive. 7.625 is 14.250, and over here 7.625 is 11.250. So there's about a half a point difference in the cost between one or the other. So now we have a non-QM full doc purchase. Now this is applicable for, let's say you have manual, you need a manually underwritten scenario, right? You weren't able to get your 1 year. Let's say you needed 1 year on your automated underwriting for your borrower to qualify because the 2-year tax return average wasn't good. But your 1 year average, let's say 2022, they hit it out of the park. 2021 wasn't that good. You need that 1 year option, and you didn't get it in your automated underwriting. So then you would just transition over to full doc where you pick your option. And here I chose the 1 year full doc tax return option. So let's go over to the conventional one a minute to see that 8.125 in the conventional loan costs $37.50, but in my non-QM, 8.125 is only costing $750. So right here we have just totally destroyed the misconception that agency is always going to be better than non-QM. I mean, here we're almost, $3,000 better in the cost. And I'll go there again so we can look. See, 8.125, 37.50, 8.125, 750. So it's a half a point better pricing in our non-QM option, where we can freely choose the 1 year option and eliminate a lot of automated underwriting headaches. So now we go to our bank statement option. Remember, this is all the same borrower. And look at this. Wow. Look at that. Our bank statement option is also better than our conventional option. Will you look at that, huh? So now we got two scenarios.
Bank statements, smoking conventional and full doc.
Yeah, look at that. So, I mean, it's a little bit more expensive than the full doc, $750 only. But keep in mind, this is bank statement. In many bank statement scenarios, our borrowers qualify for a lot more than they qualify full doc. Typically we have scenarios where a borrower could qualify with tax returns $3,000-$4,000 a month in income, but now we use their bank statements, their business bank statements, and even after adjusting for 50% expense factor and all that kind of stuff, we can get $25,000 a month in income that we can confirm using bank statements for a borrower that would maybe be 3,000-4,000 using tax returns. Now they qualify for the house they really want, instead of having to settle for one they don't want, or possibly qualifying for none at all in the market that they may be in. So again, we cannot have preconceived notions. We have to always offer all of these examples when applicable, so that then we can follow up and be the consultant that we all aim to be. So now Another option here is profit and loss. This one is a little bit higher than the conventional and is obviously higher than the full doc non-QM and the bank statement, but not by much. Now, P&L is again another amazing example when you have issues with those bank statements that doesn't allow you to fully qualify the borrower because of one guideline point or another. We have the profit and loss program. Very, very good option. And then last but not least is our flagship DSCR option. This is, remember, all the same scenario here. Obviously, the DSCR is a little bit more expensive if we look at our 8.125 rate that we've been looking at to compare. It is higher than the other examples, but then again, this is a no income verification on the borrower, no job verification on the borrower, simply qualifying the borrower on the gross rental income generated by the property. Right? So in this scenario here, we're looking at a 1.0 or above DSCR factor here for our loan. So still very good options. You can get down into the sevens with this option on a DSCR. So not really much of a difference if you compare this option, let's say, to the non-QM full doc, right? There's a little bit of a difference in price, but you can still get the deal. And remember, one is full doc and the other one is no doc on the borrower. So we're really not comparing apples to apples there, but we're just showing the loan, the income, should I say the borrower type, which is self-employed borrower, and the 6 options that we have at our disposal. So we should have very little loans falling out from us being able to do it as long as the minimum credit score is applicable.
Okay. Thank you, sir. Appreciate that. So, as Jose went through, being a consultant is something that we're very big on here at the Mortgage Calculator. So we have 350 loan officers all across the country. We're licensed in 22 states for primary residences. And then those DSCR loans, a lot of the times we can do in even more states. So if you want to go ahead and get some actual quotes for your scenario, like Jose was going over, if you are already working with one of our loan officers, that's great. Get with them and they can get you a quote within just a few minutes. Or if you're not working with one of our loan officers yet, please visit us at themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com, and we can pair you with one of our loan officers that can consult you through this process of all of these different options for your exact scenario. So thank you for tuning in. We do this show at 11 a.m. Eastern every weekday, so you can see how the rates fluctuate, and then we do a deep dive into a different topic, just like we did today for the self-employed borrower investment loan. So thank you for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everyone tomorrow morning at 11 a.m. Eastern. Everybody take care.
Thank you,
Thanks,
everybody.
everybody.